the tax law says is, once your revenue is not up to 100 million naira and your fixed assets, when we say fixed assets, what do we mean? The furniture and fittings, the buildings, the cars you have in your business is not up to 250 million naira. You are not going to pay anything. So the question this morning is, running a business? Are you running a business? These are the taxes you must know in 2026. And at the end, even though that one is not in the slide, I'm going to talk about some penalties. Because one thing about this new tax law is, for failing to obey the government, there are penalties. And it wasn't as if the penalties were not there in the first place. But this time around, the reason why people are shouting about, we can see so much noise on social media, is because of this new tax law. And they are not new. I must be sincere with you. The only thing that is new now is what we call compliance and enforcement. There's no new tax law anywhere. There's no new, I can tell you. There's nothing new about the tax. It has always been there. We had like 63 laws sectionalized in different ways, local governments, state governments, and federal government. Now they compounded it into just 4 laws. 63 into 4. Now what they are doing now is they want us to comply and they are enforcing it. I'm sure during the week, some of us that were using Money Points, we got a mail from Money Point that now there will be VAT on what? On bank transfer charges. Many airlines did not even put charges there. And there was this curious that, I remember on Monday morning, I got a voice note from one of our tax consultants, and she was like, I should explain to her that she doesn't understand what is 7.5% on every transfer. I now had to explain. I said, it is not on every transfer. It is on the charges. For instance, when you make transfer of 100,000 naira, you are being charged how much? How much? Maybe 15 naira. For instance, Zenith Bank, GT Code, they charge 15 naira. It is on that 15 naira that will charge 7.5. Now, the question is it new? It is not new. All the conventional banks have been charging this fee. They've been charging VAT right from the regime of Buhari. But because many of the fintechs, which is OPay, Money Points, Kuda, Palmpay, Smart Cash, and the rest, they've not been obeying this law. They've not been compliant. So they said from tomorrow, January 19, they will start deducting it and they have to start remitting because there are penalties if they don't obey the tax law. So what is really the reason why there are so much noise, that why we have so much noise, is because of the compliance and the enforcement. Now, we are going to talk about 8 taxes that as a business owner you need to know. You don't need to know everything. You just need to know the one that applies to you and run with it. And I want to believe we have questions and we are going to attend to our questions afterwards. So number 1 is what we call the CIT. Company income tax. Please help us to project it so that they can say it. Okay, thank you. So, company income tax. Company income tax is a tax charged on the profits of incorporated companies in Nigeria. So when we talk about incorporated companies, we are talking about limited liability company. I want to believe that as a business owner under this kind of leadership, you must have known the difference between, business name or enterprise and what we call limited. And please, I encourage you, if you have not attended the First World Business School, please do. It is important, especially if you are running a business or you intend to run a business. So limited liability company simply means your business is a juristic entity on its own. It's a separate entity. It's different from you. So when we talk about company income tax is charged on a limited liability company, not on business name, not on enterprise. Enterprise, business name, they don't pay CIT, company income tax. Next slide. So I need to clarify this. CIT, which is company income tax, is paid on profits, not on turnover. You should know the difference between this. That's why I say you should attend the business school. When we say turnover, when you hear turnover, sales, or revenue, those 3, you can write it. Turnover, sales, or revenue. We use them interchangeably, which means you can use any of the 3. It is only technically as accountant that we know that, okay, this is the sector we use turnover for, this is the sector we use revenue for, this is the sector we use sales for. But as a layman, you can use any of the 3. So when we talk about turnover, it simply means, or your revenue, revenue, it simply means the total of number of goods sold multiplied by the price. Maybe you are selling this phone now. You are selling this phone at, let's say, 10,000 naira. For a whole year, you now sold, let's say, 10,000 pieces. 10,000 times 10,000. How much is that? 10,000 multiplied by 10,000. That should, how much? 100,000. Okay. 100,000. Wow. No, 1 million. Thank you. So that's 1 million. That's your revenue. Now, when we say that is your revenue, that is your turnover. You bought this phone. How much? Let's say you bought it at 9,000 naira. That is what we call cost of sales. What does it cost you, this product? You know you sold it at how much? 10,000 naira. That is your selling price. And before you arrive at your selling price, it means you must have factored in your profits. So the difference between your turnover or your revenue or your selling price and your cost of sales is what we call gross profits. So in this case, I said we bought this phone how much? 9,000 naira. We sold it per one. How much? 10,000. What is the profits margin? 1,000. 1,000 times 10,000. You know we said we sold 10,000 pieces. That's 100,000 naira. Do we understand my maths? That's 10 million. 1,000. You know, okay, 10,000 times 10,000. How much? 100 million. Wow. Okay. So 10,000 times 10,000, 100 million. So that's our revenue for the year. Now we sold it, we bought it 9,000, right? And the profit margin is how much? 1,000. So which means our cost of sales is how much? 9,000 multiplied by 10,000. That's 90 million. 90 million deducts 100 million. That's 10 million. So that 10 million naira is your gross profits. Now, it is from your gross profits you now have something we call expenses. Your rent, your transportation, your data. Do you understand? After you have deducted your expenses, your running costs. But please, your child school fees is not a running cost. Your personal house rent is not your running cost. Anything that pertains to your business, you are allowed to deduct it. So after that, after you have deducted that, let's say that one now amounts to like 4 or 5 million naira. By the time you now deduct that, we have what we call net profits. So it is on that net profit that you are going to pay tax. So even if you are a business owner, you own an enterprise. Please, can you take note of that formula? So at times when we talk about, please prepare your accounts. Accounts is not more than that, I'm telling you. We have other components of accounts. We still have the balance sheets. We still have the cash flow. But if only you know your income statements. And what I just described now is what we call income statement all over the world in accounting. Which means, can we recap that formula again? Your turnover or revenue or sales. Abi? Minus what? No expenses. Cost of sales. What does it cost you to buy that product? Then when you deduct that, it gives you what? Your gross profits. After your gross profits, you minus your what? Expenses. Then you have your what? Net profits. So it is your net profit, out of that your net profit, that government says we want to collect 30%. So that's what people are complaining about. But it is not a new tax law. It is all over the world. It has always been there. People have been paying it. They don't complain. Dangote pays it. $1 pays it. So once they are now coming now is to informal sector saying that we want to start charging. However, small companies are exempted. So the question is, according to the new tax law, what is small company? I made a video, I'm going to release it this week, talking about many people that are complaining on social media. They don't even know the advantage the tax law has for them. The only people that are disadvantaged from this tax law is those who are making above 20 million naira in income. If you are a salary earner and you earn above 20 million naira gross income in a year, those are the ones that are going to pay more, according to the new tax law. But if you earn less than 20 million naira gross income in a year, you are going to pay less. That's number one. If you are now a business, if you are categorized as a small company, if your revenue is less than 100 million naira, and that is not just it. If your fixed assets is not up to 250 million naira, that's the part people don't know. Many people don't know that part. They are just looking at the 100 million naira revenue. What the tax law says is, once your revenue is not up to 100 million naira and your fixed assets, when we say fixed assets, what do we mean? The furniture and fittings, the buildings, the cars you have in your business is not up to 250 million naira. You are not going to pay anything to the government. Have they done well? Have they not done well? The question is, how many businesses are making up to 100 million naira? Even if they now make 100 million naira, how many businesses have fixed asset that is worth 250 million naira? I was with a client on Thursday. I did a software for her sometimes ago, like 11 months ago. So she called me. We had a good relationship, so I had to be with her. And I was now explaining, I said, I don't really have time at my hand, but for this, I have to make sure this business grows. But based on relationship, I needed to do something for her. So while we were now talking, she was now like, okay, what are my charges? I said, So I now said that we have it on our website. We got talking. So I now wanted to recap. I now said from 0 naira to 50 million naira, this is how much we charge. From 50 million to this is how much we charge. She now said, we don't even make up to 50 million naira. I just brought out the accounting software I made for her. I said, ma, can you see it? You know what our accounts was saying in 10 months? 324 million revenue. This woman never thought she has done anything up to 50 million naira. Our revenue for 10 months was already 324. It was when I showed her that she was marveled. But you know what we exempt her from the new tax law? It is our fixed assets is not even up to 100 million. So just because of that, she's not going to pay 30% to the government. So if a company makes a loss, I need to rush now. If a company makes a loss, no CIT is payable. If you are making a loss, you are not to pay company income tax. If you are a small company, you are not to pay company income tax. If you are a business name or enterprise, you are not to pay company income tax. But returns must be filed. You must file returns. When we say returns, it means you must prepare your accounts and submit to the tax office. That is what we give them the proof that truly your revenue is not up to 100 million. That is what we show as a proof that truly your fixed asset is not up to 250 million. They just want to see it. So the moment you don't file your returns, then there's a penalty for that. So as long as you have a limited liability company, filing returns is a must. I wrote it here. Penalty for not filing returns is 100,000 naira the first month, then subsequent months that you do not file your returns is 50,000 naira. 100,000 naira for the first month. Before now, it used to be 25,000, then 10,000. But now it is 100,000 naira, then subsequently it is 50,000 for not filing returns. Tax returns are filed with the Nigerian Revenue Service. So if you have a limited liability company, you are dealing with Nigerian Revenue Service, formerly called FIRS. So understand that. Next slide. Let's move on. So many business owners think they don't need to file returns if they don't make profits. Whether you make profit or not, you have to file your returns. This is wrong. Zero profit still requires filing. Next slide, sir. We move to the next tax. I said 8. So this is the second one. It is called personal income tax. This one is what concerns all of us, whether you own a business or you don't own a business. So personal income tax. Personal income tax is tax paid on income earned by individuals. So whether you are a sole proprietor, you are a freelancer, you are a partner in partnership, or you are an employee. But the good news for employees, as long as your salary is not up to 80,000 naira per month, you are not going to pay a dime in payee. As long as it is not up to 180,000. Originally, it is even 100,000 naira because there is a difference between what we call your gross income and your taxable income. So the 800,000 threshold is what we call the taxable income. And that is not your gross income. For instance, somebody who is earning 100,000 naira monthly now, that's 1.2 million naira in a year. But there are certain deductions permitted by the law. By the time they factor in those deductions, your taxable income will come around 800, 900. So that's why we believe that many employees will be exempted from this. Now, if you are a salary earner, that does not mean you will still not file returns. Because payee is different from personal income tax. Payee is a subset of personal income tax. And I will explain. For instance, you work with a primary school, you are a teacher, and you are earning, let's say, 80,000 naira. According to the tax law, you are exempted. But you as a teacher, you are still now doing a freelancing, maybe online. You have a side hustle, maybe you sell rice, you sell all those things. Now, the law says you must pay tax on that one. And that's why you need to file returns. So before now, many employees usually hide under, I'm a salary earner. They've deducted my payee. But now, you need to file your returns. That I don't just have payee, I have other streams of income. And you need to file it. And you have to deal with State Internal Revenue Service. States, if you're in Lagos. And one thing about there's something called the law of the residence. You pay your tax where you live, not where you work. You pay your tax where you live. So if you are living in Lagos, they've been deducting your tax and remitting it to Lagos. You have been doing the wrong thing. you work in Lagos, you live in Ogun State, you have to pay your tax in Ogun State, not in Lagos State. That's when they are correcting it this year. All those people living in Mowe, living in Songo, they have to be paying their tax where? In Ogun State. All those even still living in Baga, they have to be paying their taxes in Ogun State, not Lagos State. It is called the law of the residence. That's why you see many diasporans, even though they are Nigerians, they don't pay tax in Nigeria, they pay tax over there, except for those who have businesses here. So the deducted tax is remitted to the State Internal Revenue Service. That's payee. Applies to salaries, wages, bonuses, and allowances. Let's move on, sir. Sole proprietors pay tax based on net business income. So that thing that applied to company income tax, that same formula. If you own an enterprise, that's why during one of our meetings, Pastor Segun facilitated, we were talking about, and I love the perspective Pastor Segun came in with that day. We were talking about if you don't make up to 100 million, you are not going to pay any tax. And many people were like, they felt elated that day. And Pastor Sheldon came in with a fresh perspective. He said the goal is for you to make above 100 million. If you are making above 100 million naira, paying that tax will not be anything to you. I would rather make above 100 million naira and give government what belongs to them. What does the Bible say? You remember Jesus wanted to enter the temple. And they said, from who do they collect this? And Peter said, from the sons of God. He said, so that we will not offend them. Let us do what? Let us pay them. And he had to tell him, go to the river bank. The first fish you catch. So that we will not offend the government. Jesus said, pay. Because if you offend the government, they will come with penalties, and those penalties are crazy. So same thing applies to you. But the reason why we say we should register your business as a limited is because if you don't register as a limited, even if you make 20 million naira in revenue and your profit is 5 million naira, you will pay tax on that 5 million naira. Because what applies to you is not company income tax. What applies to you is personal income tax. Because enterprise and business name is seen as you, not as a juristic entity. Do we understand that? A business name, when the government is seeing business name on enterprise, is seeing you as a person. It's not seeing a business on its own. So when you make money and your profit is 5 million naira, you are going to pay PIT. So that's why we told people that please migrate to what? Limited. So that you will be exempted from tax. Now, does that mean that as a limited liability owner, you own a business, it is limited liability, you will not pay tax? You will still pay tax. You will still pay personal income tax. Because you want to tell us that you are not collecting money from that business at all? Because many people, those are the things flying online. You know, many people doing those things, they are content creators. If you really want to know about the tax law, go on LinkedIn. That's where we professionals, we talk more. It's only people, some of us that talk on TikTok and Facebook. But go on LinkedIn. Now, you will still pay personal income tax. Because out of that profit you made, definitely something will go into your accounts. So 2 ways. Let me quickly give you 2 solutions. You pick one. Is either from that company income tax, from that profit your business make, is either you pay yourself director's fee or you pay yourself salary. Is either you pay what? Salary, or you pay yourself director's fee. If you are paying yourself director's fee, you pay something called withholding tax. We are still going together. Withholding tax of director's fee is at 15%. But if you are paying yourself salary, the tax table applies to you. The tax table says the first 800,000 at 0%, the next 2.2 million at 15%, the next 9 million naira at 18%, and so on and so forth. That's the tax table. So normally I sit down with business owners, okay, which one pays you? Is it director's fee, or you should pay yourself salary monthly? Payee must be remitted monthly. Annual returns must be filed even if tax was deducted. Okay, let's move on, sir. Not remitting payee after deduction. So if you have staff, make sure before 31st of January 2026, make sure you file your payee. If you don't, any state, it is 500,000 naira penalty. Aside from the interest rates and the administrative penalty, 500,000 naira. You must submit your payee return before 31st of January 2026. That's for last year. These are trust penalty, interest, and possible prosecution. Okay, let's move on, sir. The next tax, which is the third one, it is called VAT, Value Added Tax. It is a consumption tax charged on the supply of taxable goods and services. The current VAT rate is at 7.5%, and we have so many exemptions. So many. For instance, if you sell food, you sell anything, education, primary, secondary, and tertiary, you are exempted from charging VAT. If you are also a small company, what is the definition of a small company? Let me be sure we are following. Definition of a small company: less than 100 million and fixed asset of 250 million. So if you fall into this category, you are not supposed to charge VAT on what you are selling. Section 22 subsection 4 of the new Nigerian Tax Administration Act. Yes. So you can quote that for any taxman that comes to you. Section 22 subsection 4. That's the tax law that says they are exempted. So you are not to charge VAT. Then, just like I said, there are many businesses are also exempted. For instance, those in solar energy, they are exempted. Electric cars, they are exempted. Basic food items, you produce bottled water, you produce pure water, you produce bread, you are exempted. So who is affected? Traders, service providers. If you are maybe an architect, you are an engineer, all these professionals that have professional body, you are supposed to charge VAT. Because when we say small companies, please let me say this. Small companies does not apply to any company that provides services. Any company that provides services, small company does not apply to you. The 100 million naira, 250 million naira does not apply to you. For instance, I'm a chartered accountant and a tax consultant. That 100 million naira, no matter how much I make, even if I make 10 million naira in a year, I will pay tax. Even though I'm a limited liability company. You are an engineer, you are an architect, you are the small company definition does not apply to service providers. And definition of service provider, I think, is in the tax law. Let's move on. You charge, so how does it work? You charge VAT on your invoice, you collect VAT from customers, you remit VAT to NRS, Nigerian Revenue Service. Let's move on, sir. So these are some of the items that are exempted from charging VAT. Basic food items, medical and pharmaceutical products, baby products, books and educational materials, agricultural inputs and equipment. So many. That's why I said many people did not read this tax law and they are just blaming the government. So many exemptions. So another thing you need to understand is when you charge VAT, you also need to claim input VAT. That's how many people make mistake. Now, when we say charge input VAT, when you went to buy your products, you were charged VAT. When you are selling, you also charge VAT. Now, you are going to minus these VATs. We call it output VAT and input VAT. You minus it. It is the net that you pay. But even people don't know about this, so you need to know what input VAT is. Not remitting VAT collected. VAT is not your income. You are only collecting on behalf of the government. You are only acting as a collection agent for the government. Let's move ahead. I know we are going to deal with many things during the question and answer. The number 4 type of tax you need to understand is what we call withholding tax. Withholding tax. Withholding tax is a tax deducted at source when making certain payments. So when we talk about the withholding tax, it is not a type of tax. It is not a separate type of tax. It is just an advance payment of tax. Let me cite an example. If you own a business here and you have a rented apartment, you are to deduct 10% of your rent before you give it to your landlord. That's the new tax law. It has always been the tax law. But as individuals, you are not to charge withholding tax. And as an individual, you want to pay your house rent, you are not to charge. But a business owner, if you have been facing tax auditors by now, you should know now. Before I became a tax consultant, I've had the opportunity of facing tax auditors several times. That's one of the issues we usually have. Because I know that by the time we deduct the 10%, the landlord will frown at it. But that's the new tax law. Just like I said, it is enforcement and compliance. It has always been there. So rent now, if you own a business, you have to deduct. Transactions affected: rent, consultancy services, professional services, interest, dividend, contract payments. Let's move ahead. The payer deducts withholding tax. Just like I said, you deduct 10% of your rent, especially if you know you are a limited liability company or you are a business enterprise. When IRS comes for you, they will ask for your withholding tax. That the rent you paid, where is the withholding on it? There is a loophole. There's the difference between what we call tax avoidance and tax evasion. Tax avoidance is legal, while tax evasion is illegal. It is a criminal offense. So we usually call tax avoidance, you look for a loophole in the tax law. So at times when taxmen, when they come for you, when the taxman comes for you, one of the loopholes we usually hide under is what we call across the counter transaction. Across the counter transaction, which means we did not enter into any contract. I just entered into the transaction. For instance, when you went to buy your phone, they don't expect you that you should deduct withholding tax. But if you are supplied, let's say for instance, all your staffs want to buy phone, and you are to be supplied 10 phones at a point in time, you are supposed to charge withholding tax on that supply. We call it taxable supply. But don't let me go into those technicalities. So when you deduct, you remit to tax authority issues. I should go into it. I'm thinking of time. Don't question and answer. So you issue a credit note to the recipient. So anybody that has... Now, you need to understand something. Every company has been given a mandate. Especially if you know that you have contracts, you usually collect contracts from companies. Anybody that a company is dealing with that does not have a tax ID, they will be charged 5 million naira fine. So when you submit a contract to a company and you see that you are not being called back, it means you did not quote your tax ID. Because if they give you that contract and you do not have a tax ID, they will be fined 5 million naira. So whether you like it or not, go and get your tax ID. So thinking WST is an extra tax. WST is not an extra tax. It is actually a tax credit. For instance, I work for somebody, let's say my charge is maybe 1 million naira. The person is supposed to deduct withholding tax from that tax, from that 1 million naira. He's supposed to pay me what? 900,000 naira and deduct 100,000 naira. That 100,000 naira will be paid to the government on my behalf. So when I'm now filing my returns, I will need to factor in that 100,000 naira that when I worked for Pastor Segun, he deducted 100,000 naira from my money. So that will reduce the tax I'm going to pay to the government. Do we understand? That's why we call it advance payment of tax. So it is not a separate tax, but they are doing it in such a way that they want people to help them to collect taxes from those who would not have filed returns in the first place. It is an advanced tax payment that can be used to offset future tax liability. Let's move on, sir. Number 5, capital gain tax. This also has been in the tax law, but it was only, we had some modification to it. What is capital gain tax? Whenever you sell a property and you make a gain on that property, you are supposed to pay tax on that gain. I bought a land, 5 million naira. 1 year after, I'm selling it at 7 million naira. What is my gain? What is my gain? That 2 million naira, I must pay tax on it. And what is the tax? Before now, it used to be 10%. But now they have brought it under PIT. So it means the tax table we apply to it. The tax table that I mentioned. First 800,000, 0%. Now, next 2.2 million naira at 15%. Next 9 million naira at 18%. And so on and so forth. So that's capital gain tax, and it applies on any assets that you sell, except you are using it again for business. For instance, you sold your generator at a workplace. You now want to buy a bigger generator. You know, even if you make gain on that generator, that is not a gain. You sold it so that you can buy another one. But if you are not buying another one, you have to pay tax on the gain. I bought it 10 years ago. It was selling for 150,000 then. The generator is now worth you know, some people use Corolla. They bought those Corolla. How much then? 3 million naira. But now Corolla is 8 million naira. So if such a person bought the Corolla at 3 million naira, and today he wants to sell the Corolla, and the Corolla is what? 8 million naira. The 5 million naira difference is going to pay tax on it. There are exemptions to it. When you are selling your personal car, you are allowed to sell 2 in a year without paying tax. You are allowed to sell your personal house without paying tax. But any other assets, you have to pay tax, except you are using it for business and you are replowing it into the business. So assets include land, buildings, shares, business assets. Only gain is taxed, not the total selling price. Applies when assets are sold at a profit. Certain exemptions may apply business reinvestments. Let's move on, sir. So, for instance, if you bought a piece of land at 5 million naira and sold it for 8 million naira, CGT applies on the 3 million naira gain. Let's move on, sir. The next type of tax, which is the 6th type of tax, is what we call stamp duty. Stamp duty. Let me first say this. Those of us that have been buying properties, we've been buying land. From 1st January 2026, whenever you buy property or you buy land, just keep your stamp duty by the side. Because according to the new former tax law, it was not specified. But now, you have to pay your stamp duty within 30 days. And stamp duty at times, that charges is something else. You know the implication? If you don't do your stamp duty, that document will not be admissible in the law courts. And what's the essence? Most properties usually have, some properties usually land, usually have court cases. Now imagine you tendering your documents in the law courts, and just because you did not pay stamp duty in 30 days, they are saying that we are sorry, it is void. So please, whenever you are buying land now, or you are buying any property, the money for stamp duty, just keep it aside. Sir, you pay to the government, or you pay to, if it's states, you pay to states, not federal. You pay stamp duty to. So the moment you apply, you buy the land, the deed of assignment, you are given 3. The third one is to be taken to the Ministry of Lands to go and register that land. That's when you have to be paid. That's when you have to pay the stamp duty. Theoretically, ICANN told us that it's 75 naira, it's 75 kobo on every 200 naira transaction. 75 kobo on every 200 naira transaction. But when you go to OGIS websites now where you are going to pay it, so many things has been factored in. So that's why I cannot give you a particular percentage. But theoretically, that's what we were taught in ICANN. That is 75 kobo on every 200 naira transaction. So you multiply, you divide that transaction by 200 naira, then also they charge you to pay by 75 kobo. That's how it applies. Let's move ahead. If you have any question in regards to that, you can ask. I'm trying to rush because of time. Applies to physical and electronic documents. Payments must be made within the prescribed time after execution, which is 30 days. Move on, sir. Unstamped documents will not be admissible in courts and attract penalties. The 7th type of tax I want to talk about is development tax. I will not spend time here because it applies to those who qualify to pay CIT, which means you are in the big company, large company threshold. The development tax is a consolidated levy introduced under the new tax framework, 4% on accessible profits. Let's move on to the last one. Okay, so the last one is what we call local, state and local taxes. For instance, you pay what is called business premises. Every business pays this. You pay to your state governments. In Lagos, in Ogun State, for instance, your first year in business is 10,000 naira per year, while subsequent years is 5,000 naira per year. First year, 10,000 naira. Subsequent years, 5,000 naira. Signage and advertisement fees. All these tax law, in any way, they do not negate that. If you are still going to pay for your signboard, you are still going to pay for your signage. The rationale behind that is because they believe that if they don't control this with fees, everywhere will just be jam-packed with signboards. So they are using signage and advertisement fees, because we also raised it in one of the sessions that why do we still have signage and advertisement fees? And now say it is so that they can use it to control the flood of people who just use signboards to flood everywhere. Market and local council levies, like the tenement rates, even though they are working on something. For instance, Ogun State is here to adopt the new tax law fully. By the time they adopt it, it's possible we'll not be seeing all these Okada guys that usually stop Okada on the road. Some states have adopted it, I think Bayelsa, but Ogun State is yet to adopt it. So they are working hand in hand with all the state governments. So many taxes are going to be abolished. All these Okada that we see, all these Agberos that we see. But you know that some of our governors, they use all those Agberos. So it's also difficult for them to adopt that tax law fully. Not because of anything. They want to compound it in such a way that people are not overburdened. People are not taxed in 2 ways. SMEs, so who does this apply to? I mean, state and local taxes. SMEs, traders, businesses with physical locations. Next slide, sir. So my final advice to business owners, register your business properly. Just like we said, if you are a business name, please transit as much as possible to limited liability company. Know which tax applies in your business structure. Know which tax applies to your business structure. Keep proper accounting records. There is a fine. There is a penalty for not keeping records today. For individuals, if a taxman comes to you and you don't have a record, you have to pay 10,000 naira. As a company, you have to pay 50,000 naira. File your returns on time. Separate business money from tax money. Separate business money from tax money. And most importantly, seek professional advice when in doubt. Permit me to quickly read some of the penalties here, then I close. If you don't register for tax ID, the penalty is 50,000 naira for the first month. Subsequent months is 25,000 naira. So please register for tax ID. Number 2, not filing tax returns. If you don't file for VAT, you don't file for WST, CIT, PIT, 100,000 naira for the first month, 50,000 naira for subsequent months. If you are a registered company and you give contract to an unregistered person, 5 million naira fine. Failure to withhold or deduct tax. When I said, when you as a business owner, if you want to pay your rent, you should deduct what? What is the withholding tax on rent? 10%. Now, penalty for that if you don't deduct it. When the tax man comes for you, let's say your rent is 1 million naira. What is your withholding tax? What should be the withholding tax? 100,000. What the new tax law says is that you are supposed to pay to deduct 100,000 naira. If you don't deduct the 100,000 naira, you will be charged 40% of that 100,000 naira. You will pay it personally. And it is not just that the 40% you will pay. 10% penalty applies. Then interest rates are CBN rates. The CBN rate currently is at 27.5%. So you are the one that will pay it, just not for not deducting withholding tax. When the taxman comes for you and they say, where is your record? And you fail to present your record, 200,000 naira the first day that you did not give them your record. Every day after that, 10,000 naira. Not every month, though. Every day after that, when the taxman says, where is your book? And you fail to submit it, 200,000 naira from that day, subsequent days, on 10,000 naira. Not updating your business address. You have changed your business address, but you fail to update it. 100,000 naira for the first month, 5,000 naira for subsequent months. Thank you so much. God bless you.